You're looking at inflation coming across the board from rising costs of government at federal, state, and local levels. And you're also, looking at food prices going up, and energy is going to start moving up again. But energy has that impact of kind of like the 70s, and it creates what we call a cost push inflation. So that adds to a lot of things. That's pretty much where we are going into 2027. So I would expect a lot of these things you'll start to see after the first week of July.
Quick favor before we begin: if you enjoy this video, don't forget to like and share it. Every like and share helps YouTube recommend this video to more people, which really helps the channel grow. Economist Martin Armstrong warns that inflation pressures are building across the economy. According to his analysis, rising government costs at the federal, state, and local levels are contributing to broader price increases. He notes that consumers are already seeing higher food prices, while energy costs are expected to move upward again. Armstrong explains that energy plays a critical role because it affects transportation, production, and many everyday services. This creates what economists call cost-push inflation, in which rising input costs ripple through the economy, raising prices of goods and services. He compares the current environment to patterns seen during the 1970s, when energy shocks amplified inflationary trends. Looking ahead, Armstrong believes these pressures could become more visible after the first week of July and continue developing into 2027. Businesses may face higher operating costs, households may experience reduced purchasing power, and policymakers may face greater challenges in managing economic stability. Investors and consumers alike should closely monitor energy markets, government spending, and food prices for further signals. Now, we present the clips from Martin Armstrong's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
There were a few problems, and one was that with the Middle East war, most people didn't realize, but we have offices in Dubai, and Iran shot more missiles at Dubai than they did Israel. And a lot of people were like, how come? What's going on? Dubai became the financial capital of the Middle East after Switzerland basically shot itself in the foot, confiscating money from anybody that was a Russian just because you knew Putin, which was absurd. So they've proven themselves that they can no longer be trusted. So capital has been fleeing, even Switzerland, and it's been going to either Dubai or Singapore. And so that's why Iran attacked there more than anything, mainly because people have to understand that they had also attacked. There's a $30 billion complex that they built there for AI. I mean, everybody's there. I mean, Amazon, OpenAI, etc. They didn't destroy it, but they damaged it, temporarily, and the banking system went down. I know that didn't make news, but we couldn't even get money to our staff there. So people were selling gold largely because the banking system was down. In Russia, because of the sanctions, they were selling gold. And gold goes up more for geopolitical issues. And a lot of people came to the conclusion that Iran would lose. This isn't going to be a big war. And so they really kind of took the shine off of gold in particular. Our computer does not agree with that view. It looks like we're making a low. The major support is really down to 3,500. Whether it could get to that level is debatable. It looks as though things are going to start heating up after the week of July 6th. You have a NATO meeting, etc. Zelensky's basically listening to the EU, and he's lost his mind, really. He's threatened to even invade Belarus. He's trying to destroy the bridge to Crimea, to cut them off and then take that. I mean, in Russia, I can say this, that Putin's opposition is largely saying, what the hell are you doing? Why don't you get serious? And people don't realize that Putin's probably the most rational guy at the table. He knows where this leads. And my concern is more that either he has to start getting much more aggressive, or he's overthrown and somebody else will. But to think that Russia can be defeated by Ukraine is largely a joke. And that's more or less like saying Mexico can take out the United States. So it's the metals, I think, are computers showing that we should be going into more geopolitical crisis all the way into really the first quarter of 27. So I think you'll see the metals go up when people begin to see that we have more geopolitical problems on the horizon. They haven't been paying attention to Ukraine. They haven't been paying attention to Taiwan. Despite all the negative things said about Iran, they are one of the most intelligent or educated in the Middle East. Attacking the Gulf states was more than just simply American bases. Like I said, they attacked Dubai. During COVID, oil went down to $6.50. So to survive, the Gulf states took on a tremendous amount of debt. A lot of people think that just because they're the Middle East, they're flush with cash, and that's not true. And shutting the Straits of Hormuz, Iran knows that's not going to really impact the U.S. economy because we're mostly self-sufficient. It does impact Asia and it does impact Europe. But, however, the real thing, the wild card that people aren't looking at is they also attack refineries, etc. in the Gulf states. If the Gulf states cannot pay on their debts, they default. That sets in motion a banking crisis, which will probably lead straight to London. So it's much more serious than what the headlines are talking about. And like I said, Iran is not stupid. They're not Venezuela. All right. They know pretty much what they're doing. You're seeing opposition there saying we should get the nukes. We need, this is war, basically what they're saying, and it's not going to end. Trump really has been trying to get out of it, but I don't think he can because he can't necessarily deliver Israel. So it gets to be much more complicated. I think sending his son-in-law and Witkoff over for negotiation is a wrong tactic because they're both Jewish, and this tends to be a religious war. So whether or not they're partial or impartial is irrelevant. It's just the way the other side is going to necessarily see it. The Strait of Hormuz cut off basically fertilizer. It also impacted diesel. We have offices in Thailand. I can tell you they couldn't even get gasoline to put them in a motorbike. And the diesel fuel was non-existent, so the ships couldn't even go out to fish. Food prices rising also. And then you have inflation, which government doesn't want to admit. One of the major factors in inflation is the cost of government. The more you raise taxes, all right, the higher the prices are. It's like credit cards. A few companies, you start charging 3% if you wanted to use a credit card. Virtually all of them went 3% now just to use a credit card. So it's that's the way it goes. It just, you're looking at inflation coming across the board from rising cost of government at federal, state, and local levels. And you're also, looking at food prices going up, and energy is going to start moving up again. But energy has that impact of kind of like the 70s, and it creates what we call a cost push inflation. So that adds to a lot of things. That's pretty much where we are going into 2027. So I would expect a lot of these things you'll start to see after the first week of July.
There were a few major problems tied to the Middle East conflict that many people missed. Iran did not just target Israel, it also hit Dubai, which has become a major financial hub after capital began moving away from Switzerland and toward places like Dubai and Singapore. Dubai also has a massive AI complex involving major companies, and while it was not destroyed, the disruption affected banking and money movement. That is one reason gold initially moved. then lost momentum when people assumed the conflict would stay limited. But the bigger risk is geopolitical. Ukraine, Taiwan, the Gulf states, energy, fertilizer, diesel, and food supplies are all connected. If Iran attacks refineries or Gulf states struggle with debt, it could trigger a broader banking crisis. Rising government costs, energy pressure, and food prices may also feed inflation into 2027. These issues could become much clearer after the first week of July, starting right now too. Let's get into the interview.
If you look at even the charts for gold going into 1980, it reached 479 in December of 79, and then Russia invaded Afghanistan. You can see from December to January 21st, in the last few weeks, gold doubled. It was all geopolitics. It wasn't inflation or anything else. Everyone thought, oh, that's it, going to be the Middle East war. And then it backed off. The main thing with the precious metals is it's geopolitical risk, mainly because in time of war, it's always a coin flip sometime who wins. And if you lose, your currency's worth nothing. After World War I, all of Europe basically defaulted in 1931. Even Britain suspended interest payments, and so did Canada. That's what drove the dollar up so high in the Great Depression that the politicians didn't understand, and then they passed Smoot-Hawley. Because basically, when the dollar's up so high, everybody else can undercut you in selling agriculture or whatever. It's definitely the geopolitical side is very important to understand, because that makes gold rise, because it's largely a neutral entity. You're not betting on who's going to win a war. You do have central banks buying gold, again, because it's neutral. As you know, we advise a lot of central banks, and you can't look at them like an investor. They're not buying it because, it's going to go up $30. That's not the issue. If it goes down $30, they're not selling either. All right. It's more of a neutral position in their portfolio. For example, for argument's sake, if China and U.S. went to war, all right, U.S. isn't going to, pay interest on their bonds that they hold. They would default. I mean, that's standard in geopolitical issues. So that's why you start seeing, particularly China's been acquiring gold, but not just, this nonsense of de-dollarization. They've been dumping euros too. As Europe goes into war, you don't really want to own anything. You see, a conflict, developing between Italy and United States. If you look at the Italian GDP growth, it's 0.5%. I mean, that's a tiny fraction of the United States. Europe is in financial trouble, and this is the real problem. They've been pushing basically Ukraine to get more aggressive. Zelensky threatened Belarus that if they don't take down their towers, you're aiding Russia and we will invade. I mean, this is getting to be completely bizarre at this stage. And Europe Germany's passed a rule now that if you're of draft age, you can't leave the country without government permission. They're all, gearing up for war at this stage in the game. Governments, when they're facing a threat of civil unrest, they usually need some sort of a external factor. As you know, I was called in to help create the euro, so I know the problems here. Hermann Kohl at the time refused to allow the German people to vote because he admitted before he died he would have lost 7-3. So the German people were never allowed to vote to join the euro. So what he did was he said no consolidation of the debts, because he assumed that they would see it as a bailout for Greece or Italy. All right. I warned them, this means the euro is going to fail. You'll never compete with the dollar. And they haven't been able to. Why? I can pick up the phone and say, buy me $10 billion worth of U.S. treasuries. No problem. With Europe, you can't. There is no centralized debt. I still have to make the same decision today as if the euro didn't exist. Do I want Germany? Do I want France? Do I want Italy, etc.? All right, that's why Europe has never been able to get off the ground. Now, the problem here is we saw it in 2010. Once Greece got in trouble, it immediately starts a contagion. The traders said, oh, who's next? Oh, Spain. All right. If domestically, if California went into default, the traders would do the same thing. Oh, who's next? Oh, Illinois. This is the way a trading room works. Okay. And we call it a contagion. You look for the next one. All right. So this is the problem with Europe. I can tell you that Italy has already questioned behind the scenes, asking Brussels to issue debt because they're having difficulty selling their own bonds. A government collapses when you're in these Ponzi schemes, when you can't sell the new tranche to pay off the old. All right. That's when it all comes crashing down. All right. So what they need is war. And you have, I've said on podcasts, over the past year, they thought it was a little nuts, but I said Macron has been pitching going after Europe, going after Russia, and that he thinks that conquering Europe, he'll collect the 75 trillion they have in natural resources that are still in the ground. Russia's the richest country from that perspective. All right. And people say, oh, come on, he can't be that crazy. Look it up. A couple months ago, the head of NATO just came out and said, if you think, they didn't mention his name, but if you think you can conquer Russia without the United States, you're dreaming. So he's addressing what I've been hearing behind the scenes. All right. I'm just giving you the name.
Gold's role in the global financial system goes far beyond short-term price movements. Throughout history, periods of geopolitical uncertainty, conflict, and sovereign risk have repeatedly highlighted why investors, institutions, and central banks continue to view gold as a strategic asset. Unlike government-issued currencies, gold is not tied to the economic or political decisions of any single nation, making it a unique store of value during times of instability. As global powers navigate shifting alliances, trade tensions, and evolving economic challenges, the demand for neutral reserve assets remains an important trend to watch. Central banks are increasingly focused on long-term financial security rather than short-term market fluctuations, reinforcing gold's position within the broader monetary landscape. Understanding these historical patterns and the relationship between geopolitics, currencies, and precious metals can provide valuable perspective for investors looking beyond daily headlines. If you found this analysis helpful, be sure to like the video, subscribe to the channel, and turn on notifications so you never miss future insights on gold, global markets, economic trends, and long-term investment strategies. Thanks for watching, and we'll see you in the next video.